When companies make decisions, whether it is hiring or firing staff, building a new warehouse, launching a product, or paying out dividends, they are all based on assumptions about the future. Every move a business makes is at its core an educated guess about what the next quarter, next year is going to be. But what happens when no one has a clue what next week looks like, let alone the next few years? The only responsible move is to play it safe. For companies, that means cutting costs, shelving untested products, and holding onto cash to weather any storm. For investors, it means trimming risky positions and leaning into safer assets, at least until there are more clarity in the market. Now, let's talk tariffs. In theory, tariffs are a tool to protect domestic jobs and industries, but for them to actually work, they need to be introduced gradually, with consistency and enough lead time for businesses to adjust. Instead, over the past couple of months, we've seen a chaotic wave of tariff announcements, many of which were later delayed, renegotiated, escalated, or reversed. And with that kind of unpredictability, how can companies or investors plan for anything? They can't, and so they don't. Expansion plans get shelved, hiring is paused, earnings projections flatline, and investors already on edge hold back or even start selling. Well, what can be the results? Market sentiment takes a hit. The S&P 500, home to large cap companies with significant exposure to global trade, pulls back almost 2%. Meanwhile, small cap stocks fare even worse, with negative 6% for the year. Even though they are more domestically focused, they historically carry higher risk of insolvency, which becomes a major concern in times of uncertainty. Now, while this kind of uncertainty makes planning harder, it doesn't mean opportunities disappear. They just become harder to spot and require deeper research, more caution, and a sharper eye. Risk is always a part of investing, and it becomes more important to consider. Investors need to be extra mindful, not just of potential returns, but of the downside as well. In markets like these, understanding the balance between risk and reward isn't just smart, it's essential.